Hello, my name is Ken Schwartz. I'm an attorney, and today we are going to talk about the benefits of doing a short sale. Remember, a short sale is a situation where you are selling real estate in order to satisfy a debt, and the payoff on the debt would otherwise exceed the net proceeds of sale. What are the net proceeds? It's the gross proceeds of sale less the customary closing expenses. Put another way, if you handled it as you would an ordinary transaction, it wouldn't close because you wouldn't have enough money in order to make payments on all of the secure debt. So, thus the short sale. Now, what are the benefits of doing a short sale? Why would anybody get involved in doing a short sale? Well, the first answer is that on a first mortgage, and we'll take the first mortgage first, which is a good thing. On the first mortgage, if the payoff exceeds the amount that you can pay out of the proceeds of sale, that means there is a deficiency. A deficiency is the amount that you can't pay from the proceeds of sale. Now, in a short sale, what we're doing is making application to a mortgage lender and saying, we can't pay you the amount that's due under the mortgage, so what we'd like you to do is forgive what the deficiency comes out to. And after a process, and in other sections of this series, we're going to talk about how that process works. But as part of that process, the lender would forgive the deficiency. So the first benefit that most folks tend to realize is a forgiveness of the deficiency on a first mortgage. Now, is that a big issue? Is that something which is great and wonderful? Often, no, because in today's day and age, at least in the state of New York, it's relatively uncommon for a first mortgagee to seek enforcement of a debt on a first, that is, enforcement of a deficiency on a first mortgage. It just doesn't usually happen. And not that it can't, legally speaking, after a foreclosure sale takes place, a first mortgagee would have to bring a motion or an application to the court within 90 days after the referee's deed is transferred. And if the lender does that, they can apply for a deficiency judgment, which can be quite extraordinary in certain cases. Now, if the lender doesn't bring that application within that time frame, then they forever waive the right to seek a deficiency. But it's nice to know that your lender has walked away from any remaining balance due, because a lot of folks will come to me and they'll say, should I patch into a bankruptcy proceeding? Is that my only way of getting rid of the deficiency? And what about exposure to my other assets? Can the first mortgagee come after my other assets? And the answer is, if you do a short sale, the deficiency goes away. And that's a nice thing to happen. Now, there are other benefits, such as, let's say you have a subordinate debt. When I say subordinate, I mean things like judgments. Perhaps there's a second mortgage. Maybe there's an equity line, which is one type of second mortgage. As part of the short sale process, that will go away as well, ordinarily. Doesn't have to happen, but ordinarily in today's day and age, it does go away. So if the subordinate lender walks away from the debt and cancels the outstanding balance being due, well, you can cross those off the list as well, and they're no longer due. So if you have an outstanding judgment, it could be on a credit card, it could be due to an oil company, perhaps it's a medical bill. If it's docketed or recorded in the county where the property is located, then in order to sell the property, you must pay off that debt, and you must satisfy it. And generally speaking, as part of this process, a release would be given by the secured lender or the secured party, and that debt would go away too. So that's the second benefit. Now there's a third benefit, which is a little bit more subtle that most folks don't talk about, and those are the income tax benefits. Everybody talks about the income tax consequences, the detriment of doing a short sale, but there are income tax benefits in doing a short sale. And let's run down them very briefly. There will be a separate section in this series where we talk about the income tax consequences of a short sale, but let's briefly talk about it. When you do a short sale, generally the payments have not been made on your mortgage for quite some time, and that means the interest on the mortgage would have accrued. In other words, it accumulates. when you close on a short sale and the debt gets paid off, the first dollars go towards the payment of interest. And we know that because that's what the mortgage says. So, as a cash basis taxpayer, which we all are individually, the first dollars out going towards interest would generate an interest deduction. Depending upon the amount of your mortgage, depending upon other tax considerations, limitations in the Internal Revenue Code, perhaps that mortgage is deductible, the interest is deductible, perhaps it's not. It ordinarily is. Now, as part of this process, the real estate taxes that are being paid get deducted as well, because as a cash basis taxpayer, the real estate taxes become deductible in the year in which you make the payment. And when you make a final payment in a short sale, those taxes will become deductible. There are certain other benefits, and the detriment that have given short sales a bad name ordinarily doesn't happen. So what folks talk about, the phantom income, folks will often refer to forgiveness of indebtedness or cancellation of indebtedness being one form of phantom income, which is taxable. Ordinarily it's not, and there's a separate section in this series that talks about the consequences, like I said. And moving reimbursements. Sometimes, as part of this process, a borrower can receive a moving reimbursement from a secured lender, and that can become nice to have. It could be $3,000, it could be $20,000. It all depends upon the situation. Usually it's under $10,000, but that doesn't necessarily have to be the case in every situation. So these are some of the benefits that you can realize by doing a short sale that you can put your arms around. But there's also the benefit of knowing that the property is no longer in your name. You no longer have any responsibility for it. If anybody trips and falls, if anybody decides to chase after you because they suffered a fracture, because they slipped on the snow in front of your house, none of that's going to apply anymore. It's now out of your name. And these are the benefits of doing a short sale. Well, we'll see you in the next section.